If you're looking for a tool that can help you detect chart patterns, this Tradingview indicator might be just what you need. It detects 3 different pattern groups: channel, wedge, and triangle. Before we dive deeper, let me quickly explain each of them. Channel pattern. A channel forms when price moves between 2 parallel lines, a support line at the bottom and resistance line at the top. The channel can be ascending, upward slope, bullish trend; descending, downward slope, bearish trend; horizontal or sideways, ranging market. Traders often buy near support and sell near resistance within the channel. Wedge pattern. A wedge occurs when trend lines converge, forming a triangle-like pattern but with a distinct slope. Rising wedge slopes upward, typically bearish, signals potential reversal of uptrend. Falling wedge slopes downward, typically bullish, signals potential reversal of downtrend. The pattern shows decreasing volatility and usually breaks out in the opposite direction of the slope. Triangle pattern. Triangles form when price consolidates between converging trend lines. Symmetrical triangle, upper line slopes down, lower line slopes up. Ascending triangle, flat upper line, rising lower line, bullish. Descending triangle, flat lower line, falling upper line, bearish. Volume typically decreases as price moves toward the apex, before breaking out in either direction. Our indicator is called the Auto Chart Patterns by Trendoscope. For channels, it'll spot ascending, descending, and ranging patterns. With wedges, it identifies both expanding and contracting versions of rising and falling wedges. And for triangles, it covers everything from converging and diverging patterns to ascending and descending variations. You can adjust the sensitivity of pattern detection through settings like error threshold and pivot points. The indicator uses something called Zigzag calculations. You can actually run up to 4 different zigzag settings at once to catch patterns at different scales. A quick tip for using this indicator: pay attention to the overlap settings. You can tell the indicator to avoid drawing patterns that overlap with existing ones, which helps keep your chart clean and readable. Also, there's a repaint option. If you turn this off, it'll only show patterns on confirmed bars, which can help avoid false signals. While chart patterns usually work well with basic support and resistance levels, try combining them with different moving average types, such as exponential or simple moving averages. The 200-period MA works well for identifying longer-term trends, while the 50-period MA helps catch shorter-term swings. Other technical tools like TPRSI can enhance your chart pattern analysis. For trend followers, consider taking trades only when they align with the trend direction confirmed by the TPRSI. In upcoming videos, I'll be reviewing the best strategy setups featuring this indicator, so don't forget to remember to not forget. Let me break down the specific trading strategies for each pattern type this indicator detects. You can bookmark this guide and come back to it whenever you need a quick reference. Channel pattern trading strategy. First, identify the channel by locating clear support and resistance lines and confirming consistent price bounces between these lines. Next, determine entry points by buying at the lower support line and selling at the upper resistance line. Manage risk by placing stop losses just outside channel lines, below support for long positions and above resistance for short positions. Calculate potential profit targets by measuring the vertical distance between support and resistance lines, using the channel's height as a guide. Quick one. Big update. QR Pro 2.2 is live. Auto support and resistance, range filter, swing stops, real-time P and L. Link in the description. Wedge pattern trading strategy. Begin by recognizing the price and volume compression characteristic of wedge patterns. Determine the wedge type and assess the current market trend. A rising wedge in an uptrend suggests a potential bearish reversal, while a falling wedge in a downtrend indicates a potential bullish reversal. Conversely, a falling wedge in an uptrend signals potential trend continuation, and a rising wedge in a downtrend suggests continued downward movement. Wait for a clear trendline break and confirm it with a significant volume increase. Execute the entry on the confirmed breakout, using the trendline as an initial reference point. Calculate your target based on the wedge's widest point and place a stop loss on the opposite side of the breakout direction. Triangle pattern trading strategy. Start by confirming the pattern formation with a minimum of 4 to 5 price swings and identifying the triangle type. For a symmetrical triangle, wait for a clear breakout direction and confirm it with a volume increase. Calculate the target by adding the triangle's height to the breakout point. In an ascending triangle, anticipate a bullish upward break. Enter near the support line and set a target by adding the triangle's height to the resistance line. For a descending triangle, expect a bearish downward break. Enter near the resistance line and calculate the target by subtracting the triangle's height from the support line. If you're trading futures or taking on prop firm challenges, we recently launched Quantum STS, a session-based tool built to help you take those challenges on with more structure and discipline.